of Canadian Mortgage Weekly. It is episode 23, I believe, which is crazy to think we've been doing this for 23 weeks. We're really excited to have all of you joining us this morning. We're joined, of course, with Joe Bladdock. Joe is a mortgage professional serving the industry for over 10 years. Joe is a family man. He's got 2 kids, just had his birthday. They live up in Aurelia, and Joe is enjoying the summer weather, which is really fitting for our series. He's outside today, but yeah, Joe, it's really great to have you. How are you doing today?
Not too bad, Sam. Yes, it is. It's great to be outside today. It's a little cold, so we'll see how long I last out here. But hi, everyone. It's good to be here today on the Canadian Mortgage Weekly, episode 23. Looking forward to today's episode, talking about some news as well as some
Mhm.
as today's presentation. As you mentioned, we're getting into the summer and we're talking about some awesome summer programs that you can do on your mortgage. And just right back at you, Sam. Sam Thompson is a mortgage agent with Mega Mortgage as well. He's been with Mega Mortgage now for over a year. And Sam, you are originally from Ottawa, moved to Barrie last year now, and yeah, married to Grace. And how are you doing today?
I'm doing good. Yeah, I think I'm enjoying the cool a little bit now before the weekend when it gets up to 30. So it is definitely a bit cool, but I think I'd rather it be cool than hot right now. So.
Oh, that's good. Yes, it's good to be like feeling warm too is awesome. I know the sun's been
Mhm,
out this week a lot, and it's been really good to be outside and get some sun on you. But right
mhm.
now it is a little rainy, so I'm here under this roof today, and looking forward to get started. So awesome that you're here today, Sam. Do you want to get into some news today as well?
Absolutely. So I think we can just kick it off by, commenting or addressing on what everybody has been commenting, addressing on. We're seeing so many articles about the stress test, which
Yes.
officially launched on the first a few days ago, and it was announced, a couple weeks back, but now that it's officially in effect. I don't know, but I'm sure you have as well, Joe, and any viewers, but you've likely seen numerous articles from news resources that the changes here, and I think some people maybe still don't fully understand what the changes are to the stress test.
Yeah, totally. I completely agree. There's a lot of buzz right now around the new stress test. A lot of articles are coming out right now talking about how the market could change a little bit now. Also clarifying how these rules apply to home buyers. And what originally was proposed was that the government was going to increase the stress test specifically on uninsured mortgages only, which was going to be a hit on those that were putting 20% down or more or refinancing their property. However, now, Sam, we actually see that the government has applied this stress test to not only uninsured mortgages and refinances, but also insured mortgages.
That's right. Yeah, it came almost as a bit of a shock because I think, especially dealing with a lot of first-time buyers, I was thinking that it was put in place to mainly help first-time buyers in, but it's looking more like its intent is to just cool the housing market down in general, to sort of slow purchases altogether and allow, the banks and the market to sort of take a breather, restabilize, and move from there.
Absolutely. I think it will do a little bit of that because we
Mm,
are seeing a lot of articles come out right now how it's they are feeling and how the news agencies are feeling that it is going to normalize the housing market, not necessarily crash it, but make it more of a balanced market, which is something, Sam, that you and I haven't really seen throughout the entire year.
no, not at all. It's been anything but
Yeah.
balanced. We've seen lots of swings of busyness. I mean, all of the reports from the beginning of 2021 was that we started it off at that record-breaking pace, and I think everyone's trying to figure out how we can slow it down or balance the market out a bit, as you were saying.
Absolutely. So, with that stress test, though, there is some, uh, you know, trends that you and I are seeing, because as the original stress test was announced a few years ago, and then this stress
Mm.
test 2.0 this year, buyers have consistently become harder to get into the market now. So, especially for first-time home buyers, we're seeing a lot of first-time home buyers now talk to family, and I think that. You saw an interesting article about that too, right, Sam?
I did, yes. So it was talking about the millennial housing purchase process and referring to the bank of mom and dad, which we are seeing become very accurate and very prominent, especially in a lot of our first-time buyers. That if they really want into the market now, they almost always have to either have gifted funds from a family member or have a temporary co-signer in place from one of their parents or grandparents, some relative. So yeah, it was a very fittingly titled article because we're seeing a lot of people going through the bank of mom and dad to help get them into the market.
Exactly. That bank mom and dad is really important, and it's more important than ever. And if
Mhm.
any of you first time home buyers are watching right now, and you are thinking, I'm going to wait and do this on my own, we have seen it time and time again. If you wait, you will come back, you'll be in the exact same scenario. As your income grows, the house prices seem to grow. So get
Mhm.
in with a cosigner and then take the cosigner off after a few years once your income has caught up.
Yeah.
Yeah, but other ways to get money. There was also a $5,000 home efficiency uh, grant announced last week, which I just wanted to mention on our
Mhm.
show today. And Sam, this is a really good grant as it's from the federal government. You can apply to right now if you want. Last week when I launched the link, it actually had crashed. Everyone was applying so much. But essentially, it's for primary residences, and the money will go towards the energy evaluation as well as any retrofitting you do to your current residence. So, this would include things like a furnace that's more energy efficient or some insulation that will make your home more energy efficient as well.
Mm.
A lot of people put insulation in the attic, and that can be a
Right.
cost effective improvement. So, that's pretty good way for people to get money, wouldn't you say, Sam?
Absolutely. That's a huge way to to get some cash back, but also, make your home more energy efficient, which also saves in heating costs as well as cooling. And yeah, I think that flows really well with the theme of today's episode as well, doesn't it, Joe?
It really does, yeah. So today, just to let everyone know, we're talking about, we're continuing our four-part series, Springing into Summer. Last week, we had Sam Thompson talk about our uh, updates on doing some upgrades to your backyard oasis and improvements there, how to put in a pool and fencing and decks. So
Mhm.
Sam, you did a great job going over the details on how to do that. And today specifically, we're going to be going over those who want to actually upgrade some aging items in their home. So this could mean things like your aging furnace, which could qualify then for this energy efficiency grant, as well
Mm.
as installing a central AC unit or upgrading your AC unit and repairing your roof, because these are upgrades that we typically see homeowners uh, really procrastinate on. And
Mhm.
a lot of the times, these upgrades are not done until the homeowner actually sells the home. So let's get them done now. And what I'll do is I'll actually open up our presentation today. So just give me a second here while I get this rolling for us, and I'll just get the screen on here so you guys can all see it, and then we'll get started. All right. So as you see, it's episode 23. Thankful that Sam and I can be here today
Yeah.
discussing this with you guys. If you have any questions, please leave it in the comments below. Send us a private message or call my number, and Terry Lynn can help you on the phone. So getting right into it, there's a lot of different upgrades you can do, but we're really focusing today on finally upgrading that aging furnace, AC, and roof upgrades. So these are high ticket items. It's really hard for people to actually have the funds to do this. But again, these are aging items. So what we like to do is to show you here today just how you can refinance your mortgage and get this done. So the first thing is that when you're doing this type of upgrade and improvement, we're paying for this improvement by essentially tapping into your home equity, and we're doing this by refinancing. Uh, the refinancing gives access to additional funds in addition to your mortgage that make these upgrades possible. In addition to that, you're borrowing this money at today's current low mortgage rates, which, as you know, Sam, are in the 1 and 2%. They're ultra low right now. And this can be a huge benefit rather than putting it on a Home Depot credit card at 29.88%, right, Sam?
That's right. That's actually one of the biggest keys that we've picked up in this last season is it not only makes it cheaper, more affordable for new buyers, but we are seeing a lot of refinances. If you locked into a 5 year term, 3 years ago, and you're fixed in at about around the 3% range, you can get quite a lot of savings just by refinancing into today's current rates.
Absolutely. And by doing the refinance and putting these upgrades in with your mortgage, you're essentially keeping it as one payment.
Mm.
If you go in to get put it on a Home Depot card or a separate renovation loan from your lender, then that will be a separate payment. Quite often it's unsecured, so it's a higher rate, and the monthly payment would be higher too. So having it all combined really makes the cash flow situation optimal for the homeowner. And the last thing, doing these upgrades also adds value to your property. Just like we saw with Sam's series on the decks and the pools and all that last week, it does add value to
Mhm.
your property. So we're going to dive right into a case study today. And we're looking at Bob and Jen. They decided to replace their aging furnace, central AC unit, and as well as replace the roof. I noticed I made an error on aging, and I apologize.
Mhm.
So apologies about the spelling error. So the reason why we're doing these upgrades is because the furnace is old, it's inefficient, needs constant servicing. Bob and Jen keep calling the furnace company every year. It costs money to keep this going. So the total cost of the new furnace is 6,000. The total cost of a new central AC unit is 4,500 and 7,500 to replace the roof. So 18,000. Sam, that's a lot of money for someone just to have sitting in the bank, let alone even in savings, to have $18,000 just sitting in savings, wouldn't you say?
Exactly, especially when yeah, when you're paying that outright in a liquid
Yeah.
status, right?
Yes.
Without having that, or already appointed to an emergency fund, or if you're saving for a specific purpose, it's hard to tap into that money and sort of restart those accounts back to zero and begin that saving process again.
Absolutely. Yeah. And it's hard to even, like, if someone was to do this improvement, they might want to put this on a line of credit they have available.
Right.
However, actually looking at the interest savings while when putting it into a mortgage, you're actually going to be further ahead because you're going to be saving so much on the overall amount with putting it to a new rate.
Hmm.
So continuing on our example, Bob and Jen bought this home in 2013 for 325,000. Originally, they put 5% down. Currently, they have a rate of 3.09. They renewed in 2018. They have a remaining mortgage balance of 317,000 right now and $434.83 with a monthly payment of 1779 and 34 cents. That's a pretty normal monthly payment for a mortgage right now,
Hmm.
especially with someone that has less than 20 years remaining on their mortgage.
Yeah.
However, just to break this mortgage is $1,800, and their home is now worth 550,000. So Bob and Jen really have done the math with us and seen how much interest they can save now by restarting their mortgage at a lower interest rate and adding these improvements.
Mm.
As you can see, Sam, we include all these improvements as well as the existing mortgage and the mortgage penalty of 1,800 and the legal fees of 2,000 for a new mortgage of 339, 234, and 83 cents. So when this happens, the buyers usually have, or sorry, the homeowners have an option to keep their mortgage at the current amount of years remaining or restart it to say 25 or 30 years.
Right.
And in this case, Bob and Jen will restart it to the 30 years just because they've only been in their house for a few years and they want the cash flow and they want to be able to decide what to do with their cash rather than always to have it go on their mortgage. We find that a lot of customers do prefer to have the money go into their cash
Yeah.
checking account, and then they can choose to do a lump sum payment on their mortgage later. But by taking a 1.55% variable rate term right now, a 5-year variable rate term, their payment drops to $1,178.11 per month
Wow.
versus the original $1,779. So not only are they able to pay for their improvements, but by redoing this, they're also able to get some extra cash flow. $601.23 in extra cash flow. This really is good for newer couples that have going through maybe a new baby or a second baby, like growing their little family and getting them so started, so they can start with a lower mortgage payment and then increase it along down the road. And Sam, you probably have heard a lot of buyers want to take the maximum amortization as well when you have talked to them, wouldn't you say?
Absolutely. I think that, as you were saying before, cash flow is a big thing on people's minds when they're refinancing. If they can actually save money by, refinancing into a lower rate, take that cash flow, and then they also have control of where that money's going. They can put it into a savings account, they can put it in an emergency fund, or like you're saying, you can even save it up and make lump sum payments directly to the mortgage. So it's very common that we see a lot of buyers doing that.
Exactly. Also, with these improvements, Sam, the new roof is going to add a lot of curb appeal, and
Mm.
the new furnace and AC is going to make the house a lot more comfortable, a lot more energy efficient. Perhaps these clients could then turn around and apply for that energy efficient federal grant that has just come out
Mhm.
and pay for some of these improvements, not only all in their mortgage, but maybe they can get some money back that they can then do put a prepayment on their mortgage after the improvements are done, and essentially be stuck with the lower rate, but almost the same mortgage balance if they're able to get some money back from all these upgrades.
Absolutely, yeah.
Yeah. So anyway, it's going to add curb appeal to the home with the new roof, add value to the home with all these items, and then you're left with this money. Actually, it doesn't go into thin air. It actually goes back into the value of your home. So when you actually sell your home, ideally you're actually getting this money back out of it in terms of
Mhm.
a higher selling price.
That's right.
Yeah. So I would like to invite just anyone who has a question right now, just to pop it below into the chat. Sam's going to just take a quick look at our chat to see if there's any live questions. A lot of the times we find that we get our questions after our show has aired, either privately through social media. So if you prefer to do that, definitely go ahead. Or give us a call or an email at joe@joebladdock.com, and me or Sam or Terry Lynn will be happy to chat with you all and see where you're at today with your situation and give you some numbers as to where you could be in the future if you're looking at refinancing to upgrade some of those aging items around your home. As you know, Sam, it's not only just the furnace and AC and the roof that could be needed. Perhaps
Mhm.
someone may want to upgrade something else. Maybe they have an old water heater that they've been looking at upgrading that could fit into this program as well. But we are here to help.
Absolutely, yeah.
All right. So before we take off for today, we're just going to introduce our next episode. And Sam, that's going to be episode 24, where we're looking at, so you'll be leading that one next week.
Mhm.
All about, can you tell us a little bit about what we're going to be talking about there?
Yes, it's going to be a very exciting episode. I covered off before some entertainment value to your outdoor space. So now we're going to be looking at some of those improvements that you might be thinking of making inside your home. If that's, say, an entertainment room, a new security system, or maybe even a hot tub. We're going to be looking at what the refinancing and how to get funds to make those improvements in order to add some interior entertainment spaces. So it's going to be a really good one. I'm excited to get into that with you guys next week.
Fantastic, Sam. Thanks for the announcement. We'll make sure that we post something about it later this week so you guys can keep in touch with what we're doing on social media. Like our posts, share it with anyone that you feel is could benefit from this information today. And Sam and I will see you next week, Thursday at 11:30 on episode 24.